You'd think losing 47% hurts? In 2011, Bitcoin crashed 94%. Everyone said it was dead. In 2013, it crashed 87%. Mt. Gox took everybody's money, and everyone said it was dead. In 2018, it dropped 84%. The SEC said it was coming for blood, and everybody said it was dead. In 2022, Luna blew up, FTX blew up, it dropped 77%, and everybody thought it was dead. Every single time the perma-bears celebrated. And every single time, they were wrong. I'm Oceans, this is Beyond Bitcoin. Let me tell you about Crash 477. According to the Bitcoin Obituaries website, and yes, this is a real website, Bitcoin has been declared dead 477 times since 2010. 477 separate articles, op-eds, and TV segments formally announcing that Bitcoin was over, dead, gone, never coming back. 477 times the skeptics were confident enough to write the obituary. 477 times they were wrong. And right now we're sitting at 47% off the all-time high of 126,000. And the cycle bears are back at their desks, typing furiously. So let me give you some historical context, because the history here is genuinely interesting. I mean, if you're interested in this kind of thing. First, we're going to walk through the pattern, why every Bitcoin crash looks identical to the people living through it, and why the ending is always the same. Second, we're going through every major crash one by one. 2011, 2013, 2018, 2022. What caused each one, what people said, and what actually happened. Like a phoenix rising from the ashes. And third, where we are right now. By every historical metric, we're sitting exactly where the prior 4 cycles all agreed on. And if you know what happened to the people who bought at this point in those cycles, this episode might change how you think about this dip. And if I knew, well, I probably wouldn't be making these episodes, now would I? You ready? Let's go. Every Bitcoin crash follows the same script. Every single one. Step 1, Bitcoin runs up, parabolic. The charts look vertical. Mainstream media writes about it. First-time buyers pile in. Uber drivers are suddenly very talkative about it. Step 2, something breaks. A hack, a regulatory announcement, a macro shock, an orgy in a penthouse. This causes a massive collapse. The specific trigger changes every cycle. The pattern doesn't. Step 3, Bitcoin drops fast and ugly, 50, 60, 70, 80%. The same people calling for 500k Bitcoin are now calling for 0. Step 4, the obituaries. Forbes runs the piece. Bloomberg runs the piece. Your uncle texts you. The regulators get serious. Peter Schiff goes on CNBC and says he was right all along. Step 5, Bitcoin still doesn't care. The network keeps running. Blocks keep getting mined. Developers keep building. Well, probably mostly in Claude at this point. And the wallets that were quietly accumulating at the bottom, those people come out generationally wealthy. Now the media, they live in step 4. They are professionally incentivized to write about step 4, which is the obituaries, because panic drives clicks. But what they never cover, and what doesn't fit in their narrative, is step 5. Let me show you step 5 times in a row. In June 2011, Bitcoin had just run from under $1 to $31.50. Its first big parabolic run. The internet was starting to take notice. Then someone hacked Mt. Gox, the exchange handling 70% of all the Bitcoin trades at the time, and dumped hundreds of thousands of coins. Price flash crashed to a penny, literally 1 cent, which, by the way, doesn't exist anymore. It recovered to $2, and then it kept falling. By November 2011, Bitcoin was at $2.01, down 94% from its peak. The Guardian called it a failed experiment. Forbes said it was imploding. The New York Times couldn't decide whether they wanted to write an obituary or a retrospective, but they did both. So what happened next? Bitcoin ran from $2 to $1,163 by November 2013. That's a 57,000% recovery from the bottom. And if you held through that 94% down, you made 570 times your money on the other side. 570 times. Does that sound familiar? Now, the 2013 crash. And here's where it gets wild, because 2013 had 2 crashes. First, Bitcoin hit $265 in April of 2013. Mt. Gox couldn't handle the volume. A DDoS attack, and believe me, I had to look that up, took the exchange down and they suspended trading. Bitcoin fell to $54, down 79%. But then it recovered. It ran all the way back up to $1,163 by November 2013. Then China banned financial institutions from handling Bitcoin, and it came out that Mt. Gox had been quietly insolvent for years. They had 850,000 Bitcoin that had been stolen and undetected from 2011 to 2013. When they finally filed for bankruptcy in February of 2014, the headline was everywhere. Take a look.
What was once one of the world's biggest Bitcoin exchanges, Mt. Gox, has filed for bankruptcy protection in Japan. The unregulated exchange admitted to losing 850,000 Bitcoins worth more than $450 million due to some weakness in the system, said Chief Executive Mark Karpeles. 750,000 of those lost Bitcoins belonged to customers, while 100,000 were the company's. The announcement of the hacking comes after a tumultuous few weeks for Mt. Gox, which has remained silent after halting trades of the digital currency. Karpeles bowed in apology during a news conference at the Tokyo District Court, but said the overall Bitcoin industry is healthy and will keep growing. The Times reports that Bitcoin prices on the CoinDex index were down Friday morning.
Mark Karpeles, the CEO of Mt. Gox, which was the biggest Bitcoin exchange in the world at the time, told the world that he lost 850,000 Bitcoin. Bitcoin fell from $1,163 to $152, like that. Down 87%, the longest Bitcoin bear market in history, 48 months. Bitcoin fell from $1,163 to $152, down 87%. That was the longest Bitcoin bear market in history. It was 48 months. That was a cold winter. What happened next? Bitcoin hit $20,000 in December of 2017 from $152. That's a 13,000% recovery. 13,000%. Now, real quick, because we're talking about history repeating itself and us being prepared for it, our partners at sat123.com carry premium survival gear, the kind you actually want when things get unpredictable out there. Quality equipment, serious prep, none of the gimmicks. Go to sat123.com and use the promo code SIMPLY and you'll get 15% off your entire purchase on satellite phones, solar-powered generators, and all the devices you need to stay connected. That's sat123.com. Promo code SIMPLY. Now, 2017 is what brought most people into Bitcoin, myself included. Everyone has a story from this cycle. Bitcoin ran from $900 in January to $20,000 by December. That's a 2,100% increase in one calendar year. ICOs were raising hundreds of millions of dollars for technical shit. Your neighbor was a crypto expert, and CNBC was doing daily segments. Then 2018 happened. The SEC announced it was coming for ICOs. Exchange hacks happened in North Korea and Japan, and the froth drained out fast. Bitcoin fell from $20,000 to $3,200 over the course of the year, down 84%.
South Korea's intelligence agency says it has evidence showing North Korea was behind 2 hack attacks on the country's cryptocurrency exchanges earlier this year. The National Intelligence Service says North Korea is suspected of stealing the personal information of some 30,000 people registered with Bitsum in June and robbing virtual money from Coiniz in September. It says malicious code used by the North Korean group behind the 2014 Sony Pictures hack was discovered in both cases.
Respected economist Nouriel Roubini testified before the United States Senate that Bitcoin was the mother of all bubbles. Forbes, Bloomberg, the same headlines, the same certainty, the same track record of being wrong. What happened next? 3 years later, Bitcoin hit $69,000 from $3,200. That's a 2,000% recovery. 2022, this one hurts because the causes were institutional. In May, Terra Luna USD lost its peg. The whole algorithmic stablecoin system collapsed in 72 hours. 45 billion in value gone. Luna went from $119 to effectively zero.
Following a day in which teetering stablecoin Terra USD bounced around 90 cents, it resumed its free fall overnight to approach 30 cents before recovering partly to 43 cents this morning
and 64 cents this afternoon.
However, this performance could be considered downright bullish when compared to Luna, the token designed to maintain its $1 peg, which has now fallen below $2. Luna is down a staggering 98% in the past 5 days, which has seen its market capitalization lose $25 billion this week.
A lot of people got wiped out in this time. The contagion spread like a virus. 3 Arrows Capital went bankrupt, then Celsius, then Voyager, and then in November, FTX, the second largest crypto exchange in the world, imploded. Sam Bankman-Fried had been secretly using customer funds for trading. $8 billion missing. So he got arrested.
What do we know about how Sam Bankman-Fried effed up, in his words?
Yeah, he did tell investors that, and he would be extremely grateful, he asked investors, if they would step in and help fill this hole. It's an $8 billion hole in FTX's balance sheet. That is bigger than the size of Robinhood's entire market value. And remember, last year alone, they raised $2 billion in 6 months from investors, from Sequoia, who had marked down the value of its entire stake and had doubled down on its bet. Skybridge was in many levels of series rounds here. The Paul Tudor Jones family was in other rounds as well. There's investors really around the globe that were exposed to this. And so listen, going back to investors is very difficult. He'll need about $4 billion, according to our reporting. And whether he can get that or not, he would likely have to file for bankruptcy protection if he can't get that money. There's a lot of question about the ramifications here for FTX and the industry at large. I think Jim Bianco put it well in a call we had yesterday, that there's a real risk here that dozens of firms will fail on the back of this, given that they had their accounts with FTX. So you have consumers both on the institutional side, potential miners, brokerages that may not be able to get their money back, as well as customers who have lost billions of dollars here. So unless the industry came in and bailed them out again, remember, this is why JP Morgan thinks that there's going to be more risk here at play and more margin calls. There's a real risk here that there is nobody to save the day for FTX, meaning others will feel pressure from this.
Bitcoin fell from $69,000 to $15,000, down 77%. This time, the obituaries had actual ammunition. Not just Bitcoin is volatile, actual fraud, actual criminal charges, actual victims. The Bitcoin is dead count hit new records. What happened next after that, though? 16 months later, driven by the first spot Bitcoin ETF approvals, Bitcoin broke $69,000 and kept going. It hit $109,000 in early 2025, from $15,000 to $109,000. That's a 604% recovery in 16 months. Now let's pause here for a second, because if you're new to Bitcoin and this crash is freaking you out, I want you to hear this part. Every single crash that I just described, the people who got hurt the worst were the ones who left their Bitcoin on an exchange that they didn't control. Mt. Gox, FTX, Voyager, etc., etc., etc. All of them were exchange failures, not Bitcoin failing, exchanges failing. Our partners at the Bitcoin Way exist for this exact reason. They'll walk you through self-custody, simply, safely, wherever you're starting from. Go to thebitcoinway.com right now. You can book a free 30-minute consultation at thebitcoinway.com/beyondbitcoin. There's no pitch, there's no pressure, just real people trying to help you out. They've been through this before. That's thebitcoinway.com/beyondbitcoin. Here's what the bears keep saying this cycle. The 4-year cycle is broken. Institutional money changes the dynamics. It's too correlated to risk assets now.
With what's going on right now, do you feel that this 4-year cycle is still resonant?
I think we still have a 4-year cycle, but it's starting to become somewhat disjointed. And it's reflective of the sheer amount of institutional flow that we've seen come in. So what that's done is it's created a natural liquidity pool and a base to stop, what would have been traditional retail flow, bringing Bitcoin down. And so, yes, price has been volatile, but it's nowhere near as volatile as it was in the last cycle.
Okay, here's what hasn't changed. A 21 million hard cap. Nobody's printing more. No Fed can change that. No tariff touches it. It's fixed, it's absolute, it's forever. The network is stronger than any previous cycle. More hash rate, more nodes, more wallets, more developers. Every bear market burns the weak projects and leaves Bitcoin's infrastructure cleaner. Institutional adoption is higher than any previous cycle. BlackRock is running a spot ETF. Fidelity Strategy holds 3.4% of all the Bitcoin that will ever exist. This infrastructure didn't exist at any previous bottom. The floor is higher. Here's Saylor this month. The critics are saying his thesis is breaking, but listen to what he says.
Well, most people don't understand how the internet works, but they obviously use it every day. They don't understand how their iPhone is put together, but they use it. And it is like that video you mentioned of you holding the iPhone saying everybody's going to want this. And Stretch seems to be that product that addresses the main market need of not wanting volatility, but wanting a stable cash dividend. You have a 2+ year runway for it with cash. MSTR is still trading at a premium. You guys still are buying Bitcoin, but yet every time I see you on these news programs, it seems like they're expecting Bitcoin to go to zero, and you've gone from hero to, oh my gosh, what's happening? Bitcoin's dying. Do you ever feel like they're rooting for you to fail, and how do you deal with like that swing in sentiment?
The struggle is real. The struggle is real, but to be more serious, when Bitcoin is hitting all-time highs, there's a sense of exuberance, and all of the media turns positive, and it's glowing, and people are doing high fives. And when it draws down, there's a gloominess to it, and then people over forecast to the negative. I think that it's the volatility that drives the engagement and the interest and the speculation, and there's something to talk about, and they're talking about us. You know what they're not talking about is they're not talking about real estate on the Upper East Side of Manhattan. They're not talking about timber rights. They're not, like people they talk about all these non-volatile assets. Well, non-volatile assets means there's no news. And if there's no news, there's no interest.
He's been through this before, multiple times. And every single time the thesis was called broken. So he bought more. That's not stubbornness. That's a conviction built on 16 years of the same pattern. Here's a clip of Saylor back in 2012 clearly explaining the issue.
There's not an 8-year-old on the planet that doesn't want an iPhone 5. Right? Who wants to wait 42 seconds to watch something download instead of 2 seconds? Nobody, right? You don't have to be a genius to run Apple computer. You just have to, every year, make the product a bit lighter, a bit more elegant, make it a better radio, make it a better battery. And then I sat with, one of the 10 richest guys in the world for dinner 5 nights ago, and we had dinner for 4 hours, and he did half the talking, I did half the talking, and he's much more successful than I am. I understand that, by the way. As I said, sometimes you got to do other things than just have opinions to make money, right? There's a lot of execution involved in the rest, but I have opinions. So he said to me, Apple computer, can these guys hold their prices? Aren't they going to follow the model of the PC industry? Aren't their prices going to taper down? Their 40% margins are going to become 30 and 35 and 20. And it's another example of people just know enough to hurt themselves, right? If you go to France, and this is the benefit of seeing enough, you go to France, you see Bernard Arnault runs a company, LVMH. They're selling handbags for $4,000, $3,000, $2,500 each. This is a device that women view as fashion, and it's 10,000 years old. And for 10,000 years, no, the prices are not lower after 10,000 years. If you actually...
Things that are genuinely valuable don't follow skeptics' predictions. Great brands, hard assets, things with real properties that the market keeps rediscovering. Bitcoin has been around for 16 years now. Priced in any currency, it's not lower than when it started. It has died 477 times. The price is up roughly 10 million% from its first transaction. That's not luck, that's the pattern. So here are the recovery timelines crash by crash. 2011 crash, 20 months to the new all-time high. 2013 crash, 48 months to the new all-time high. That's the longest. 2018 crash, 36 months to the new all-time high. 2022 crash, 16 months to the new all-time high, the fastest yet. The recoveries are getting faster, not slower. And every cycle, the institutional infrastructure gets deeper, the floor gets higher, the recovery accelerates. As I mentioned in my previous video, here's the fear and greed index right now. We hit extreme fear, single digits, earlier this cycle. That is where every prior recovery started. Every Bitcoin cycle has its moment, a point where, looking back, it was obvious. Where the fear was maximum, the headlines were screaming, and the person who didn't panic, or better, the person who bought, quietly changed the financial trajectory of their family. 2011 buyers made 570x. 2015 buyers made 130x. 2018 buyers made 20x. 2022 buyers, they made 7x. We are here, sitting at 47% off the $126,000 high. The obituary writers are actively firing up their ChatGPTs. The 4-year cycle bears are loud, running their AI agents. And the fear and greed index is reading extreme fear. But it's all a hallucination. Someone is about to be a 2026 buyer. Is it you? Someone is going to tell their kids about this moment. You see where this is going, right? Before we close, if you want to connect with people who have actually lived through every one of these crashes and kept holding, we're on the ClubOrange.org app, formerly known as the Orange Pill app. Same community, new name. You can find me there. I'm at Oceans, OSHINS. I'm on the app, just my name. I read every message. So if this crash has got you a little rattled, and if you want to hear from some people who are buying at $2 or $152 or $3,200 or $15,000, those people are right there. ClubOrange.org. My handle is Oceans, again, at Oceans. So here's where we are right now. Bitcoin is down 47% from the all-time high. That puts this drawdown exactly in the middle of every previous crash. Smaller than 2011, smaller than 2013, comparable to 2022. The obituary count is at 477. This crash will probably add a few more. The network is still running, blocks are still being mined, Sailor is still buying, institutional infrastructure has never been deeper. This is crash 477, and I'm sure it won't be the last. So the question was never if Bitcoin recovers. Every single piece of historical evidence says it does. The question is whether you're positioned for it when it does. 477 times someone was confident enough to write that Bitcoin was dead, and 477 times they were wrong. Not because they were stupid, well maybe, but because they were looking at the short term. They were looking at the chart, at the thing that just broke. They were looking at the fear, not the fundamentals. Bitcoin doesn't care about the short term. It's a fixed supply monetary network built to outlast every crash, every government, every central bank, and every economic cycle. The people who understood that clearly enough to hold or buy when the obituaries were being written, those people are fine. But the people writing the obituaries, they'll be writing the next one too, I'm sure. So make sure you get out there and you study Bitcoin. Anyway, thank you so much for watching this video. If you like what you see and you want to see more, make sure you hit that like button below, or you could subscribe to the Simply Bitcoin channel for more content like this. We're coming out with it every single day of the week. Also, do not forget to hit that notification bell. You can also leave us a comment if you like. If you like it, you don't like it, whatever you want. If you want to reach out to me directly, I'm also on X at RunDanceBitcoin. That's RUNDANCE Bitcoin, because I used to run and dance and I like Bitcoin. Anyway, until next time.